Hey there, everyone. We have a few major catalysts coming back to back in the after hours tonight. NVIDIA earnings, and then also in the AM hours tomorrow before the market opens. We get non-farm payrolls and the unemployment rate. And that's a double whammy, if you will, while the market is closed. And they are very significant for us. And the market could feel downward pressure because of that. I want to spend a little bit of time today talking about moving averages and relative strength index according to what we see for SPY, and just give some commentary on that. And then also touch on just a few general things as well. So let's put this up here for you. We'll start off with the monthly chart. So this is SPY tracking the S&P 500. Every candle's worth 1 month. So when you look at this entire thing, this goes all the way back. The data that I have goes until January of 1993. And one of the first things that I want you to look at, first of all, is that the direction is generally up, means market's generally bullish. And there we go. A few other things. We'll get back to the moving averages in just 1 second. This is the relative strength index here at the bottom. And what we can see when we look at that relative strength index, there we go, is that we spend most of our time up above this midline of about 50. Once again, reflecting that generally bullish sentiment of the markets, if you will. And the times when we actually see it go bearish, especially oversold, that's where those massive opportunities come in. And there we go. You can see that it took the dot-com bubble in order to drag the market to its knees back in October of 2002. And then had a significant rally from that time. So it went from $50 all the way up to $111 over the next 5 years. So we had that doubling effect happen in that 5-year time span. And then we'll go to the bottom of the Great Recession, at least as per the momentum that we see in February of 2009, when we went way oversold down to under 20 on the RSI that's down here that we're looking at it. That's what led us to this very significant rise with a few dips and whatever, and up until we got into the pandemic. So 11-year run, pandemic hit, and then hiccup, back up, and then recession in 22, and then back up again. And then a hiccup for tariffs, if you will, that you can see which ended up being pretty significant. So what else do we see here? Well, first of all, every time that we come down to about that midline of 50, it seems to be a minor time, even when we look at 2022 with how painful that was. Yeah, it brought us down below 50 a little bit, and when the RSI started ticking back up above that is when those major opportunities started showing themselves back up. And I think that's important to talk about because that can talk about opportunities if we experience any sort of market weakness. Now, as per the market moving averages, yeah, we've had a little bit of yuckiness over the past, we'll say through the month of November. You can see that with this red candle, but we're still riding on top of that 5-month EMA that you see here, which is overall still in fairly bullish territory when we look at those long time horizons. And that touching the 13 EMA, which is in yellow here, also leads to significant opportunities. Even though we sold down below it in April, by the time we closed, we were back up above it. And then you can see the run that kept on happening when we found out that that was still the floor, was the 13-month EMA. Now, as per the 50, it takes all the way back until 2022 to take us down to the 50-month exponential moving average. And look at that touch and the opportunity that followed it. So I feel like people get angry in the comments when I talk about any sort of weakness or downturn because they want it to be bullish now. However, and I do take advantage of those movements. I took advantage of 2 small movements yesterday, one with Bitcoin, one with bigbear.ai stock. And with each of those, well, it was actually IBIT, the ETF that tracks Bitcoin. So for that, I made 23% on my Bitcoin option, and then I made 46% on my bigbear.ai option, just off some small bullish movements that we had during that time. These major opportunities, though, are really what set us up for those success moments where we can start to go deeply into leverage and really start to let them play out. And so I just wanted to speak to that as per the moving averages. As for the 200 EMA, which is here in blue, there we go, which wasn't really established. It didn't really show up. We didn't have 200 candles on this until August of 2009. But being above the 200 is generally considered to be a bullish place to be. And you can see the price action that as soon as we were able to get up above it, there's that touch on the 50, found out that it was support, move. And then, man, what are we looking at for the 50-month? October 2011, the next time that we visited that 50-month exponential moving average took us all the way until the pandemic in order to see that happen again. So when we pushed down below it and closed above it, that was the signal that the next month could be very, very good for us, especially if the floor holds. Well, it did. We opened down below, touched a little lower, but then closed way up. And that's when you got that rocket ship ride that lasted throughout the end of 2021. And then, we had some major shifts in order to cause this to happen. But this is absolutely massive. So this major drop that we saw in the pandemic was the pandemic. This massive drop that we saw here was supply shortages. It was the Fed getting rid of cheap money. There was a lot of turmoil that caused that to happen. And then we move forward from there into these months. And I think that's where we had, I think it was FTX with Sam Bankman-Fried happening, and maybe a few other things. Maybe banking crisis also snuck in there. I'd have to go ahead and check the dates on that one. And then look what tariffs did. So we actually need some major confirmation that something is bad in order for that to happen. Well, what we're missing right now for a further sell down is confirmation, and that's what we can get tonight and tomorrow morning is confirmation that things aren't great, and then we get that sell down, or we get confirmation that it's time to keep the punch going back at the party, which is what makes them major catalysts and major moments, and why I'm talking about the SPY chart today with those moving averages. So let me put this back up here. We'll drop down to a weekly chart to see a little bit more of what we can see. Well, what we're looking at for the 50-week EMA, where we're still way above it, which is, I think, where that major opportunity comes in if we sell down further. Some things that might cause us to see that: we are no longer riding on top of the 5. As a matter of fact, we're sitting on top of the 13, which we could have opportunity, I think, today and tomorrow morning. Sets up for that opportunity if we're able to do it. If not, we break down below the 13, and that could set up for a bearish crossover of the 5 and the 13. We sell down lower from there in the near term, as those are very fast moving averages. And then, well, we have to watch and see, do we hit our heads on those moving averages or not? Will we find them as resistance or not? That's going to be very telling. When we drop down to the daily chart, what you can see is that we already have some of the bearish crossovers. When we have the 5 cross down over the 13, we had that drop, and then that was on Friday on the 7th, and then we had some good and heartening news about end of government shutdown, so that was catalyst, push us back up above. Plus, we bounced off that 50, if you will. So even though we had that crossover, we had that support down below. Well, look what happened. We pushed up above, then we fell back down below it. Another bearish crossover this time. We broke the 50 as support for us. So do we hit our heads this pre-market hour, or in the pre-market hours leading into the market day today? There's that 5 preparing to cross over. The 13 crossing over the 50, by the way, is very bearish. So this is a daily chart, so this would bring us to the most near-term thing, and we get a bit more noise for this. But even so, when we look at the RSI for SPY, that's the volume, here comes the relative strength index, you can see that we spend a lot of time, the majority of the time, up above 50. Right now we're at 39. Those oversold territories, like I was talking about back in April, they don't last long. And man, we had a ripping ride with a pullback on the tariffs, if you will, during that time. So for the RSI, we are down in bearish territory, but we are still up above the 200 EMA, which is this line here in blue, which I think that if we do sell down from here, once again sets up that major opportunity. It might actually be a little bit south, that closer to 600. And that would be about a 10% give back. The Qs reflect about the same thing. Not saying that we do get that. What I'm saying is I want to be prepared that if we do get it, I want to be set up for that next major, massive bullish moment that comes our way as we step out of this uncertainty into a more certain time, if you will. That the most nearest thing that we want to watch for from the daily chart is getting back up on top of that 50-day EMA, and any bearish crossovers could be enough to cause a little bit more downward pressure to happen, especially if we snap this low that we have over here back at 653, putting in a new major low because we broke this minor low, setting up that new major low. Then we're watching, okay, well, are we still failing to break the highs? If so, we've already have lower highs, lower lows. We have signs that this thing's on its way down. If we drop down to something like the hourly, there we go. What you can see is that we fell down, we got rejected at the 50-hour mark, the 50 EMA that we have on here, and then fell back down through. We're trying to cross back over the 5 and the 13, that 50-hour EMA, which is at 666, very ominous, which I think, there we go. It's also the 50 EMA. That's probably pretty important to us, so I would watch out for that. So anybody who's superstitious out there and believes in beasting, if you will, which is the finding 666 and everything, I'd say that's the important level to watch for SPY today. Do we make it up to it? And if so, do we get a big old fat rejection on that value? And I'm going to stick with my sentiment, whether people like it or they don't, that there could be de-risking today leading up to those NVIDIA earnings. Not that it's everything, but also with the morning catalyst that we have, the labor market reports, I think that it would be surprised if more people kind of set up for a holding pattern, if you will, rather than aggressive buying pattern today, where we would start to see a lot of bullishness come into the markets. And then we have those moving averages to watch for. Will we hit our heads on resistances or do we push through them? And as always, even though I'm talking about my expectations, I still respond to the technicals as they play out to make sure that I don't miss those market movements. Guys, I got to let you go for now. I will see you over in the Discord. Links in the description. And then also, if you want to check out that coursework through Stockmo Academy, that link is there waiting for you as well. Code word doctor saves you $400. Bundling the courses together will also get you a bundle discount on top of it. Thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.